So good evening and welcome to this live Ask Me Anything About Property with myself, Saj Hussain. Hopefully you can hear me okay. We're going live on various different platforms. So we're on Facebook, LinkedIn, YouTube, Instagram and Twitter. So live across various different platforms, really here for the next half an hour or so to be able to answer your questions to help you get further faster in your property investing journey. So I've got a few questions that are not answered from last week that we didn't get around to doing. So I'm going to start with those first. If you've got any questions, anything I can help you with, make sure you put a question on whatever platform you're watching on, and my lovely assistant over here, Khalid, will will kind of pass those questions to me, and I'll do my very best to answer those questions for you. We're trying something a little bit different with the tech today, so hopefully that works okay. This is a weekly thing that I've been doing for a few months now, every Monday at 8:30 p.m. live on the various different platforms. Really, as I said, here to help you get further faster in your property journey by helping you answering your property questions for you. So let's start off with the first question. I've got them printed out here so I can have a quick look. The first question was on LinkedIn from Neil Sweeney. What geographical area would you invest and why? So really this question is around where do you start to invest? So if you're getting started in property, I think the most important thing to understand first is why you're looking to invest. What is it ultimately you're trying to achieve? So I'm going to make some assumptions here, Neil, that maybe you're looking to build a portfolio for the longer term. So you're looking at buy to let, and if you're looking to create an income from buy to let, and also to build a portfolio, as I said, for the longer term, which may be a pension plan. So if that's your strategy, that might be very different. So say for somebody who's looking to generate chunks of cash right now. So when we talk about where to invest, it really depends on what strategy you're using, because in isolation, the location doesn't really mean anything. So if you're looking for longer term buy-to-let portfolio, what I would be thinking about is what areas are there that consistently have a good demand from tenants, are not necessarily the cheapest, the poorest areas. This is my personal preference. I'd go for areas that are slightly better quality, that looks like there's some growth. So, for example, if you're looking at a postcode that has, say, a nice, fairly nice area, nice demographic in that area, then the next best area, the one just next to it, often has a spillover, i.e., people aspire to get into that area. Maybe it's too expensive, and that always pulls up the value. So what this generally means is, over time, as the nicer area goes up in value, it pulls up the surrounding areas with it. So think about the areas that are not necessarily the best, the most expensive, but actually where people like to live. One thing I tend to say is, if people are aspiring to get out of an area, that's probably not the one that you want to invest in, personally speaking. Now, for some people, that might be a strategy. If you want good tenants that can be long-term, look after the properties for you, not too much headache, it produces some rental profit, but also what it will do, it will give you capital growth for the longer term for the pension plan. So as I said, Neil, there's many different answers to this question. It really depends on why ultimately you're looking to invest and what outcome you're looking to try and achieve. But if you're doing buy-to-lets, that's the way I would do it. So for example, let's use Birmingham example, because I'm in Birmingham. If I was looking to invest in Birmingham, so some of the nice areas, like for example, like Kings Heath and Moseley, they're fairly expensive. But if you look at some of the surrounding areas that are nearby, for example, Kings Norton, Sturchley, these are close by. And if you're investing in those areas, you'll find over time they'll should get some capital growth on those as well. So hopefully, Neil, that answers your question. Let me know if you want some further clarification on that, or if you want to give me some more context. I'm happy to pick up that question again. So let's have a look at the next question. The next question came through by email, and the person asked to be anonymous, so I won't mention the name. And the question is, how can I refinance an expensive buy-to-let mortgage when the property is in negative equity? So first of all, ouch, that's a painful position to be in. But let's say you are in that position. What are your options? You're quite limited in terms of what you can do. In terms of mortgage products, clearly, first of all, you need a very good mortgage broker to be able to understand and explore the mortgage market for you to see what's possible. If you're in negative equity, chances are you might struggle to be able to refinance onto that, because the days of, say, 85 and 90% buy-to-let mortgages are pretty much non-existent. Most mortgage products are around 75%. There may be some products that are slightly higher loan to value that you might be able to get. This is where you'll need a good mortgage broker to stick to see what products are available. But let's assume that isn't the option. Then how do you get off that product, or how do you get off that higher rate? Well, one sort of obvious one is to pay down some of the debt and get it out of negative equity. But that may not be an option. You might not be in a position where you can pay down some of that debt. So the other thing that I would be thinking to do if I was in that situation, how do I get out of this deal? How can I exit out of it? In terms of if it's an expensive property, it's got no equity in it, i.e. negative equity as well. It means it needs some growth to be able to get out of it with profit. And at the same time, you're on a very expensive mortgage product. You're getting beaten up on both sides. Often it's usually one or the other, so it's an unusual position to be in. So I would think about how can I either increase its income or increase its value. So let's talk about the increase in the income first of all. So you can't change a mortgage product, you can't reduce the rate, so it is what it is. How can you create more income from that property to be able to service that debt? Well, one might be to change it to a HMO, so you've got multiple people living there paying more money to you rather than maybe a family at the moment, which is more what you might have. The other option is maybe looking at some kind of service accommodation with short stay, much higher income per month. And these are ways that you might be able to increase the amount of income you're generating from that property. One other way might be, this is not something I do, but variations around working tax rates where, depending on the combinations of people that are staying there, you can get a higher rate for that person that's staying in the property. So a few different ways where you can create more income. Now, most of these would have an impact with in terms of the mortgage lender may or may not be happy about what's going on. But right now, if you're in a situation with a negative equity and you're struggling, they should be listening to you, because there's a thing called treating customers fairly, which is where the banks really should be cooperative and understanding about your situation to try and help you, rather than be rushing to maybe try and repossess a property because you're in a position where you can't necessarily maintain the payments, or you're stuck. They should be working with you to try and help you. So there should be some leniency about changing the or giving you consent to running a service accommodation, or maybe short stays, and possibly other variations that we talked about as well. So this is about getting more income from the property, so you can continue to service the debt, and over time you're just kind of riding through the market. As the prices start going up, you come out of negative equity, and then you'll be in a better position to maybe switch to a different type of a mortgage. The other way to think about it is how can you add value to the property so it's worth more to get it out of negative equity. Now, I'm not sure right now the background circumstances in terms of why you wanted to hang on to this property, or there may be other reasons why it's important that you want to maintain the property in your portfolio. So thinking about what can add value to it. Can you increase its value by increasing the volume, by extensions, etc., which makes it bigger than it is and makes it more valuable, and take it out of negative equity? Again, this is talking about putting money into the property. You may not be in a position to do that. Other ways, could you split the property? If it's a large property, maybe you can split it into several flats, get planning permission to split it into flats, not necessarily go through the process of splitting it yourself, but by getting some planning gain, you're making it worth more. Yes, you'll have to invest some money with an architect and possibly a planning consultant to help you to be able to increase its value. But by increasing the value through planning, not necessarily making the spend on the property, if you're not in a position to do that, again, you're lifting the value for potentially somebody else to come and pay you more money for it. These are ways to really try and either get out of negative equity by lifting the value up, or to create more income to be able to service the higher debt on the property that you've got. Hopefully that helps. That gives you some ideas. I'm just going to jump on to the next question that I've got here. And remember, if you want your question answered, put it into the question box on whatever platform you're on. So this is a question by email. I think it's actually a few questions, so we'll just kind of work through them. I haven't got a name on here. Mitch. So these are from Mitch, and this comes through by email. He's saying he's got two questions. In fact, there's 1, 2, 3, 4. There's a few questions I can see on here, but let's just work through them anyway. So the first one is how do you determine if an area is good for professional let HMO? How can you assess there'll be sustained demand? So let's talk about that one first of all. So if you want to run a professional HMO, it's first of all, it's about understanding your operating environment. What does that mean? That means understand what's going on in the area that you want to run a professional HMO. Just because you have a large house that potentially lends itself to be converted to a really nice house for professional tenants, it doesn't mean that there's a market there for them, or they're going to want to come and stay in your property. This is where you need to do a little bit of research to understand the market. So market research as well, and also about the area. So obvious place, first of all, is with starting with the council in terms of what rules, regulations are in place, and don't just talk to just, for example, licensing. Talk to the housing team, talk to the HMO licensing department, ask about if there's any other licensing or additional licensing that exists, talk to planning about whether there's any planning rules there. Often these things aren't all available for one person. You've got to speak to different people in different departments, particularly larger councils, like for example, Birmingham Council. You've got to speak to different people to try and get a sense for what it is that you want to do in terms of rules and regulations. So let's say you've done all that, you're okay with that, you're good to go, you can set the house up, and now you really want to set it up for professional lets. So the first thing to do is see who else is already doing this and how well are they doing that. So jump onto the likes of Spare Room and other platforms that are advertising rooms to let to see what type of properties are being advertised, what's the condition of those properties, what are they asking for in terms of rent. Then one part of your question is about how to know there's continuous demand. So we do professional lets in Birmingham. We have literally hundreds and hundreds of rooms. Our HMO management agency as well. And then we find there's peaks and troughs throughout the year. So right now we're coming into February, we're coming out the quieter part of the year, and it's starting to pick up a little bit. And during summer it gets very, very busy, and during winter it gets a little bit quiet again. So it tends to be a seasonal change throughout the market for professional lets. Now, why does this happen? Well, there's many, many reasons. I can give you a couple of examples. So generally around Christmas, a lot of people don't want to move. They just tend to stick to where they are. So it's not a great time of the year for people wanting to move. In the summer, we tend to be very busy because often many of our tenants are former graduates. So they've graduated from university and they're moving on. So it's that ties in with the season of the university terms coming to an end. So that tends to be another reason why summer tends to get very, very busy. So just because you're doing research right now, don't take it in isolation. It doesn't mean this is representative of the whole year. This is the research you're doing right now that exists in the market. So you're looking at static data, i.e. what's available to rent, what are people asking for in terms of rent, how much are they asking for, how long is that property been on the market for, so you can do some work. And for example, you can record some data about what's available right now, check again in a week's time, in 2 weeks' time, are those properties still up, have they been taken? So this is static data. You're just capturing what's happening right now, a snapshot of the market and those little changes within those few weeks. The other thing to do is go out and look at some of these properties and talk to some of the other owners. Now, if you're speaking to what's potentially your competition, some people may be helpful, some may not. Some may give you open and honest advice, and some may be trying to throw in a bit of a red herring to put you off because they're thinking, I don't want any more competition around here, right? So you have to take a little bit of a pinch of salt, but it's what you're doing is collating information from different places to build up a picture of what's the market like in terms of where you want to create these houses. So you do your online research, see what's available, you record your data there, you phone up, you try and speak to the owners of the properties, you understand how long they've been a landlord, how's the market changing, what type of tenants they have, what they're charging right now versus what they were charging last year, what they think is going to happen in the next few months over the next year, and what they might be charging next year in the marketplace. You're trying to get a viewpoint from somebody who's maybe doing this for a little while. And then, of course, you want to speak to agents that specialize in letting rooms. Not general agents, in my opinion. They tend not to be experienced enough to be able to give you representative answers. You want somebody that's focused in this place, and often there aren't many agents that do that. So, for example, in Birmingham, there's not many agents that specialize just in professional HMOs. As I said, we're probably the largest agency in Birmingham that does that. So we get a really good sense of what's going on in the market. So you want to go and speak to people like that who are managing properties, HMOs, professional let specifically, so not students, not social housing. You're looking for professional tenants because that's the market you want to be in, and that's the market you want to understand. So this is where I would get the data from in terms of what's going on in the market. And remember, you don't want to take extremes, what's the most expensive or what's the lowest price. You want to try and get a medium, try and get a sense of what rates exist, what quality of accommodation exists, what type of tenants come to stay there, how long they stay there, what their typical ages are, demographics. Sometimes it could be ethnic makeups as well. So, for example, a certain category of people may be a bigger population in a certain area. So you understand your market better. So hopefully that helps. That gives you a little bit of information there. So let me jump onto the second part of that question. So if we just flick back to that question, which is from Mitch. So the second one was, what strategies available to structure joint venture? What roles each partner in the joint venture need to play? That's a huge question. I could probably spend 3 days answering that question for you. But in a nutshell, you need to think about what does everybody contribute? what's being contributed into this and what's being taken out of that. It's like a big pot that everybody's coming and putting something into, and you're going to share it and you're going to take something out of it as well. So who's putting what in, and what is it that they're taking out of that? So what value are people bringing? Sometimes people talk about financial contribution. This person's going to put in £50,000, that one's going to put in 20, that one's going to put in £100,000, so we maybe do a percentage in that way. But that's just financial. You need to think about what skills are they going to bring, what experience, who's going to commit more time to this project. So in the partnership, often the way I tend to work, so that's probably the best example I can give you, is what I say to my partners is, look, I use my time, skill, and experience to find fantastic investment opportunities. Then I'll partner with people who have got the cash, who will invest in those projects, let me get on with them so we can share the profit. So effectively what I'm saying to my funding partners, because that's how I see them, they're funding the project. Look, all you need to do is introduce the money. I will take care of everything else. I'll deliver the results and we can share the profit. So that's a joint venture in my mind in terms of how we're setting that up. Remember, joint ventures are about sharing risk and reward. So yes, you're sharing the potential upside, but you're also sharing the potential downside as well. So it's really important your partner or potential partners understand this. On YouTube, I've got fairly lengthy videos that go into this in some detail as well in terms of understanding joint ventures. I've run some workshops as well in terms of setting up joint ventures, going out and raising money, something I've been fortunate being very good at doing for projects. But ultimately, some simple learnings for you is, and I was speaking to somebody about this morning, wants to raise a significant amount of money for a project down in the southeast. And I'll say, look, really, people are going to be investing in you first. So people need the opportunity to get to know you, like you, and trust you before they will make the decision to invest. Investing in the property will be secondary. Investing in you will come first. They'll first want to see that they can buy into you, they like you, they want to do business with you. Then it will be about the numbers of the property and how that's going to work and what roles people are going to play. So for example, it could be an equal contribution of money and other resources as well. For instance, you could both be putting £50,000 into a project, and one of you is going to go off and deal with the builders and the tradespeople. The other person is going to deal with the architects, the surveyors, the estate agents, solicitors, etc., etc. You just divide up the roles, so whatever you think is fair. Now, ultimately, I think the best place to start with is your strengths. What is it you're absolutely fantastic at doing? Pick those things and then see what's left over and who is going to be the best person to do that. Can you give that to the two of you within the team? Are you splitting up who's going to do that? Or maybe you need an outside person. So for example, if nobody's excited about doing the accounts and the bookkeeping, it's an important role, don't take it on just because you feel you have to do it. If you know deep down you are not going to want to do it, you're not going to do a great job, and it's going to sit right down on your priority list, maybe hire somebody in for that specific role. It doesn't mean everything needs to be split between the two of you. You're both responsible for delivering the project. It doesn't mean it's just the two of you that need to be there doing everything. So breaking down the resource, breaking down what needs to be done and passing it to other people. So as I said, it's a huge topic, but hopefully it gives you a few starting points to think about. Khalid's frantically writing down some questions there. Do you want to chuck some of those over to me and we'll have a look at those? Khalid, in terms of what you've got there.
Last question for Mitch. Yeah, if you go back to Mitch.
I've got another one for Mitch.
Just at the bottom.
Okay.
An easy one.
So, Mitch's question is, do we need to connect on LinkedIn? Absolutely, we should connect on LinkedIn. We should connect on all social media platforms. Make sure you stay connected. Whatever platform you want to connect on Facebook, LinkedIn, YouTube, Instagram. Haven't quite figured out TikTok just yet. But look, I'm on most platforms, so just connect, and then you'll see what I'm up to, and I can help you in any way. So thank you for that, Mitch. So have you got a question there, or which one's got here?
Last one.
Okay, I've got on here from Jimmy Sharif, which is on YouTube. Don't you think Brexit will cause a drop in property prices by blocking further Europeans to enter the UK and decrease the demand? Well, you know, it could have an impact. Personally speaking, I think the market is so robust. There's such a shortage of accommodation, just because there aren't any people necessarily migrating in from other countries in the same numbers that they were previously, that the market is going to be massively different. So for example, if you let's take the Polish community as an example. Years ago, there were a huge number of Polish people that were coming to the UK to work and settle, but as the market changed and things changed, many of them decided to go back because it just wasn't viable anymore. They weren't able to produce the income that they thought, or the pound was weaker, or whatever it might be. There were many, many reasons why it changes. So change would always happen. We should be open to change. We should embrace change. Change is where opportunities exist. So yes, there might be changes in the type of people that are renting accommodation or the number of people that you're thinking of, but there'll be other types as well. There'll be other sectors. There's such a shortage of accommodation. If you think about the population in this country, you think about how many homes exist and what shortage there is, there's going to be no issue in finding people to live in your houses and live in your property. What you need to be ready to do is adapt to the type of markets that you're working in. Think about hotels. So for example, you've got, say, a Premier Inn hotel and a Holiday Inn hotel. Both hotels, they both let out rooms, but at very different prices. Why? Because they target different markets and different sectors. In the same way, you have to think about your accommodation. Who is it targeted for? If a market changes, you adjust your product and vary your product. Those people, the ones that I see suffer the most in property, are the ones that don't adapt to change. So for instance, the student market is not one that I've been involved in, that I have any property in, because it's not really my cup of tea. But the student market is a great example. Years and years ago, we would call the student rooms digs, and I remember back when I was at university, probably 30 odd years ago, we'd be paying 20-something pound a week for a room, and literally it was just a room and a bed, and that was it, a grotty little house. But there was with some friends, we were really happy. It was student life. But things aren't like that anymore. People pay 100 and something pounds per week for a room. They expect certain things. The parents expect to have certain expectations. The purpose-built buildings that are being put up now are very, very different. So the market's moved on, and those people that have got old, tired properties are struggling and wondering, why can't they let their properties? Why is it I've not got any students waiting to take the property on? Years and years ago, they used to be queuing up ready to take my property. Why is that not happening? The reason it's not happening is the market's changed and they haven't. So I think it's really open to be ready to adapt for change. So I think I've covered those questions. Make sure you connect with me on the various social media platforms. I'm here. Let me know if there's anything I can help you with. I'm just going to see what other questions Kaz got over here. How are we doing for time?
7 minutes.
So we'll try and do some of these before we finish, and any leftover we'll carry on with those next week. So we want to get your question answered. Make sure you put it on the platform that you're watching on. If you're watching this live, we'll try and do this for you now. And if you're not watching this live, then you're watching a recording, in which case I'll try and do it on the next Monday that I see your question. So we've got a question here on LinkedIn from Imran Yunis. Any thoughts on service accommodation as an opportunity? Simple answer to that, yes, it's a great opportunity. I've been a little bit slow coming to the market because I was a little unsure of a few things. And sometimes I'm quite analytical when it comes to changing strategies and looking at different strategies. So I've been looking at how the market's been kind of settling a little bit and finding its feet. So we spent a few months building our systems and processes. So our service accommodation business, I work with IDAS, my business partner in that venture. And, we spent a few months building up the foundation, but now it's really moving fast, about 20-something units, and we're going to be growing very quickly over this year because we've got the systems and processes in place to mean we can grow. But just as I was describing earlier on, it's really about understanding your market. Who is it you're serving? Who is it your market? So we've got very clear where we want our accommodation in Birmingham for short stays, what type of accommodation we want, who we want to target, what rates we want to exist. So yes, service accommodation, just like many strategies, it works. But remember, you can't do everything. So you have to pick a strategy that's going to be right for you in the location you're in the time you can commit to it, the amount of resources, financial input you might need as well to make that strategy work. Just because one person is using it and doing it really well, it doesn't mean it works for everybody. So you have to take various other things into consideration, as I said, depending on how much time, money, experience you have, and then think, is it going to work for where you are location-wise? Because that's absolutely key. So for example, I've got friends up in the northeast that are constantly finding cheap below market value property, and then I've got friends in Birmingham that are struggling to find below market value property. Why is that? Well, the markets are different. It's because markets exist within markets, or micro markets as sometimes people call them. Just because, for example, B&B is working with a certain strategy in one area doesn't mean you'll work in another area. So we need to take all of these things into consideration, or take a holistic approach, as I say, to make sure you're using the right strategy. So in short, yes, service accommodation works. I think it's a very good strategy. You have to make sure you've got everything set up correctly, i.e. the right location, the right type of properties, and you've set up correctly and have the right systems and processes in place. So kind of got time for one final question. So we'll do one more before we finish. Thank you very much. So another one on LinkedIn. It's a question from Damien. what's the best way to find an investor partner? So I was talking about my funding partners, as I lovingly and affectionately refer to them as. My funding partner, essentially people that work with me, that bring cash and introduce cash into projects that I'm doing. So they're funding partners. I do all the work and we'll share the profit. And sometimes it's just done as a simple loan arrangement where it's a fixed amount of money for a fixed period of time for a fixed return. And just like I was talking about earlier, I think the most important thing is to allow people an opportunity to get to know you, like you, and trust you. So depending on where you are in your journey right now, Damien, think about, for example, how is it you can allow people to learn more about you, understand where you are, what is it you're doing right now, what is it you're looking to try and achieve, and why is it that they should get involved. I think about how you can be more investable. So then when you're at a network meeting, or whether you're running a YouTube video or whatever it might be, then at that way you can share with people what you're doing in your journey and allow them to see into your life and what you're up to. So one of the reasons I love using social media, because it's a great way for not only for me to share my knowledge and experience and help other people, but it's allow people an insight into my life and what I'm doing as a property investor and what I'm up to. And of course, some people reach out and say, hey, look, there's some interesting projects you're doing. I'd love to get involved. How would that work? Yeah. So again, it's a way of starting those conversations. It doesn't mean everybody I have that conversation with will turn into an investing partner. It may be that they're not a good fit. Maybe I'm not quite happy with what they're looking for, or whatever it might be. It doesn't mean that everything will translate into business. But because you have lots of those leads and inquiries going on, here's the good news. You can be selective about who you choose to work with and not have to work with somebody just because they've got the funds. And that's the best place to be in, that you can choose who is going to be your funding partner, rather than somebody you've met because they've got the money. They're kind of squeezing you in every direction, and you feel that actually I've got no other options. This is the only person who wants to work with me. They've got the money. That's the worst possible joint venture you may get involved with, because they're the ones, I promise you, will give you enormous amounts of headache and heartache. So think about how you can be investable, and the way to be investable is create credibility. So if you're already doing property, share some of that, talk to people, whether it's a brochure, whether it's a website, whether it's videos, whether you just talk to people about what you're doing, whether you have an opportunity at a local property network meeting to go and stand up and share what it is you're up to, so people can see what you're doing. So you create some of that credibility. So sometimes I'm doing tours of my properties in terms of what I'm up to. It allows people to see the kind of projects I'm doing. So I'm doing various different projects, from HMOs to flipping property to developing to converting a commercial building to building a house out the ground. It's quite a range and mixture of things. So what that does, if I don't share that with anybody, how is anybody going to know what type of properties I'm doing, what type of deals I'm doing, and how they can get involved? So it's important you're sharing wherever you are in your journey, whatever it is that you're doing, allowing people to see what you do. And then most importantly, when you're looking to work with a partner, with a funding partner, talk to them about what they want, what they're looking for, or what's most important for them in wanting to find somebody to work with and find somebody to invest with. It's not ultimately about just what you want, it's about what they might be looking for as well. And of course, network meetings, as I mentioned, one of the best places to be able to meet people. They're live networking events. So I run a monthly meeting in Birmingham called Saj Hussein's Property Meet. This network meeting's been running for over a year now. We've got 100 people there pretty much consistently every single month that the meeting's running. So I encourage you to come along, to book your place nice and early, because often people miss out, because once we reach the 100 limit, we close ticket sales. So if you've been there before, you'll know it's a packed room. It's a great place to be able to meet and network with like-minded people. To learn more about the meeting, go to sajhussain.com/networking. So it's that/networking, and you'll get the details of the property meet. So I just want to say thank you so much for staying and listening and watching. Hopefully you find this useful. Let me know in the comments how I can make this better for you, how I can help you get further faster. Any other questions you've got for me, and I'll hope to answer those next Monday. Here every Monday at 8:30, answering your questions on various different platforms. That's Facebook, LinkedIn, YouTube, Instagram, and Twitter, if I haven't forgotten anything. Those are platforms on. So thank you so much, and look forward to seeing you again next week.